What's up everyone, Dylan here. I wanted to hop on and do a quick tutorial on how I strategically and effectively execute my options trades. So for this video, I'm going to be using the Interactive Brokers platform as well as TD Ameritrade's Thinkorswim platform. From my understanding, these are two of the most widely used platforms when it comes to options trading. So that being said, I'm confident that this video will help show a lot of retail traders some tricks that can, help you get better fills. So that being said, I'm going to come up with a theoretical trade plan on Tesla, and then based on that trading plan, I'm going to show you how I would execute the orders accordingly. Okay, so before we get into it, I want to make it clear that it is crucial to have a fully structured plan prior to getting into any trades. Okay, so every single trade that I execute, I make sure I have a fully structured, predetermined plan before entering. Okay. What does a fully structured plan consist of? It consists of an entry, a stop loss, and profit-taking targets. Okay? So before I even enter the trade, I know exactly where I'm going to get out if it happens to be a good outcome or a bad outcome. So if I enter Tesla puts and the trade goes in my favor, guess what? I'm going to follow my plan and execute accordingly, right? I'm going to scale out, I'm going to scale out at my price targets. On the flip side, if I enter the Tesla puts and it goes against me, guess what? I have my predetermined plan that consists of a stop loss. So any outcome, good or bad, I am going to be ready. Okay? So I wanted to make that clear because this strategy works best if you have a fully structured plan. We're going to use a systematic approach so that we can automate these orders so that you could just let the plan play out and then, you'll be ready and you'll be able to quickly get in and out based on that fully structured plan. So for this video, I see a lot of people looking at this Tesla gap fill on the daily chart. So for this video, we're going to use this particular play. Okay, so like I said, this is a theoretical play. I'm not looking at this exact play to trade myself, but let's just use it for this video. So for this video, my entry is going to be $944. My price target is going to be $910. As you can see on the chart, the gap fill starts at $944 and then it totally fills. It closes the gap at $910. For a stop loss, we're going to use $950. We're going to use a whole psychological number just for it to be easy to follow along. So that being said, let's say that we are going to enter at $944 as I mentioned. Okay, so Thinkorswim has this nice price tool that I used to use. I don't use it anymore because I could do it in my head, but this is a very, very, very good tool to use. Okay, so right here you'll see it says expected Tesla price. Okay, so essentially Thinkorswim has some type of advanced algorithm or calculation that it uses to predict the price of the underlying asset based on the price of the premiums for the specific strike price. So in this case, we're going to play the 900 puts. So if we're looking to enter at $944 on Tesla, we want this expected Tesla price to read somewhere near $944. As a result, we're going to tweak the premium price until it matches 944. So let's give it a go. All right, you can see the expected price is dropping. Okay, so right here. So let's go one more. We'll do 630 because this isn't always spot on. It's usually never spot on, but for the most part, it's pretty damn close. So we can expect that the 900 strike puts are going to cost $6.30 when the underlying stock price gets to our entry. Okay, 944 is the entry. So this will allow you to get one step ahead of the other retail traders that are also trying to get in at the same point that you are. Okay, this strategy works best with limit orders. I personally do not use market orders unless I'm trading very, very tight spreads on names such as, SPY, QQQ, and Apple. So for Tesla, in this case, the spreads are looking like they're 15 cents. That's not bad because of how volatile and, how much volume and open interest there are on these particular strike prices. But, once you get into trading other names such as Shopify and Chipotle and, other more expensive premiums that have wider spreads, you want to make sure that you are comfortable using limit orders, okay? So I recommend using limit orders for any spreads that are more than, say, 9 cents, 10 cents. So, like I said, we can assume that the 900 strike puts will be around $6.30 by the time that, our entry point triggers. Okay, so $6.30. You go over here if you use Interactive Brokers. Let's type in 6.3. Okay, so when Tesla gets near our entry point, all we have to do is now press buy once these, the entry triggers. Okay, so rather than finagling your order, once you see the entry trigger, you're already one step ahead. So you have this ready to go, whether you're 30 minutes in advance, an hour in advance, so on and so forth. Okay? So once you execute the order, right, once you enter, we use that same exact strategy for your exits. Okay? So like I said, our exit is $910, right? 910 is the end of the gap fill. That being said, let's go over back to TOS and let's find out what these premiums will be at around our $910 strike price or $910 target price. So let's fast forward a little bit. Okay, so at around $910, we can speculate that the premiums on the $900 strike put will be around $11.75. Like I said, I tend to go a little bit less because it's not always 100%, on the money. So in this case, I would do about $11.50. So before the price is even remotely close to your exit point, you're ready to go. Okay, so say we executed at $6.30, right? We press buy. All right, let's disregard that. So now let's say you're in, right? You're in at $6.30. Now you could say, okay, let's get out at $11.50, right? That was the price. Yep, $11.50. So now we're going to sell at $11.50. That's going to be our final target. Okay, so now you can sit and watch the price action, and your order is ready and it's ready to go. So you can automate your trading, okay? Once you get your trading down to a systematic approach, what that does is it allows your emotions to be contained, okay? You want to contain your emotions, because if your emotions start to escalate, it's going to make you take, if your emotions escalate, you're going to take irrational decisions, okay? You're going to allow your emotions to sell this position way before you want to, okay? And even looking at your P&L, if you find yourself looking at your profit and loss, you're going to notice that your emotions escalate, and as a result, you're going to sell based on satisfying your emotions. And then, an hour later, when your target gets hit, you're going to be pissed off because you're like, oh my gosh, I sold for $7, whereas I could have held out and waited for my final target to get hit. And, I would have gotten another 50% out of these contracts. So automating your plan is the best way, in my opinion, to go about taming your emotions. So let's just say you have multiple scale outs. You do the same exact thing. So say your final target is 1150, right? We entered at 944. The final target is 910. Let's just say you want to, get out half at 925. All right, let's go back to this. So at 925, let's see. So 925, like I said, I'm looking at this, right? At 925, the price will be around 925. So if you enter at 650, you can set, limit orders at $9.25 and $11.50, and then just sit back and relax. Okay? Same thing goes for the stop loss. So rather than putting your stop loss in, which you can do, you can put your stop loss in like a hard stop. I personally use a mental stop loss when trading weekly options. So what I do in this case, right? So our predetermined stop loss was $950. So let's see what that would be. Okay. Okay, so let's just say $5.40. So what I would do in this case is I would come over here, type in 540, and yet again, I am one step ahead. So say some crazy news comes out and the market reverses and, it's going against you. Guess what? I already have the order set up. Okay, so rather than quickly having to come over here and manually go and pick your premium price, I have this set up, several minutes, if not hours, before the premiums come to this stop loss level. Okay, so a lot of members ask like, yo, how'd you get out so quick? And I tell them like, oh, I had my order queued up fucking 15 minutes ago. All right, excuse my language. So that's how I strategically and effectively get in and out of these options plays. Like I said, just a quick tutorial. Hopefully you guys learned something. If not, I apologize. But if you do not have access to Thinkorswim, there are other platforms that have similar tools. There's even websites that have similar tools to this. So they're definitely readily available and out there. You just have to kind of do some research to find it. So that's about it. I'm going to wrap it up there. If you guys learned anything, great. Feel free to ask me any questions or provide any feedback down in the comment section. And that's about it. Peace.